Hello and welcome to the Crypto SA channel. My name is Jose and I thank you for being here again watching this video. Today we're going to be talking about Bitcoin as usual, but also about a chart pattern that could be reproducing itself at the Dow Jones, meaning that we could be going into a very deep recessionary period that could be called a depression, just like in 1929. But that being said, let's just go straight to Bitcoin. For starters, we have these long-term trend lines that if you watch our previous videos, you're gonna see where they come from. And that being said, here we have like a descending broadening wedge, which is a bullish reversal pattern. So I do think, despite the fact that we could be going towards a recessionary period, there could still be a pump to the upside to grab more liquidity, not only at the crypto market but also at the stock market. Okay, but let's get to Bitcoin right through, and let's start here with so we have these lines. Before we cross above this white line, we're gonna be mainly bearish. Okay, so I mean, let's put it in here, $64,000 for the bullish, the potential bullish area, right? And we could erase these lines and start to bring up the levels here. We have a monthly resistance level for the price action that if it's not broken or reestablished, let's just erase this one as well and see what are the levels. These are the two levels. One of them is right close to the top of these upper trend line here at the broadening wedge. Okay, we also have the daily and the weekly bullish levels that are quite far away from us. Okay, so it's reasonable to think that even if we come to retest, or to test actually, in this case the all-time highs here, new all-time highs at the $80,000 range, we could still just get a massive rejection and go all the way back down, especially if we indeed go into like a recessionary period. Okay, so that being said, we also have a weekly and a daily level to watch, which is pretty much like it shows. This let's erase the monthly to then just watch here closely the weekly and daily levels. If we see the daily level, we see that we have a support here at the bottom around the $59,000 range. Okay, so I mean, we're not having that many daily closes below this line, and every time we do have a daily close below, you see that there's like it's a fighting area. So it's the same here for the weekly. You know, we had actually just one close below and we wicked below this $55,500 range, and those are reasonable levels to watch, as well as this level in here for the weekly. And this is anything below, I mean, if we start closing dailies one after another below the $59,000 range, we could be bearish for longer on the daily. And if it does happen on the weekly, then it's the same. We're going to be bearish on the weekly, you know. But I don't think that for now this is what's about to happen. I think what we have, like a close thing that we have here, is like a shoulder, a head, and maybe another shoulder in here. This could be a case, you know, but let's just wait and see, because it seems that we're more prone to come retest this upper regions in here. Not, I mean, not as far maybe if we are to make like another shoulder right here, you know, but it seems that it's being hard for us to fall below the $59,000 range, as you can see, you know. So, and when you come to the 4-hourly, and I can pretty much erase the other levels as well to make it more simple for us. What we have here is this. Let's erase this as well. On the 4-hourly, we're pretty much holding the EMA. And if we come and, oops, if we come and see the RSI, what happens is that we're above the EMA here, right? The stochastic RSI is pretty much like swinging back and forth, up and down, and we have this bullish divergence in here, which is good for the start of next week, you know. And sometimes we can take good positions during weekends, you know. So I think this is a reasonable bullish divergence to watch. Of course, it can be like a third touch, you know. This could happen as well. It could just like come down here to break it up, and which would make like a third touch here at this line something doable, you know. It just doesn't seem to be the case for now. If we come to the 1 hourly, you see that we're above the bearish area, so we're not bearish on the 1 hourly, although we're still bearish on the 4 hourly, okay? So that being said, below 58.9, we should watch this downward trend line to see if we're gonna fall below. I don't think we will because of what I just said. So here at the 59.3, we're gonna be at neutral region, like which is this area right here, and to flip bullish, then we need to go above the $63.5 thousand range, which is the same area that we've explored before. Okay, so I hope you memorize these levels. Let's get to the fibs to see if we have some sort of like a confluence, which is always good to see. I love confluences. So fib wise, that's how we are. If we take this low and this high, we're pretty much above the 382, which is great. So the 382 is a very good level to keep if we are to try out higher levels, especially if we're thinking about breaking through this resistance zoning here and go into the higher levels, the targets of the descending broadening wedge. In this case, these are the targets that I can pretty much project, and those are like this one in here. Doesn't matter where we break this thing, you see there's close to the 382 in here. It's super reasonable, the $58,000 range, you know. This is a kind of like one of the lowest breakups that we could think of, and there's this one as well around the $90,000 range, and we might see the $90,000 range come in the other fibs. So we have this fib, it's a simple one, from the bottom to the top of this last leg, and we have another fib. Let's go to the daily, make it easier for us. So on the daily, what we have is the trend-based fib from this high, this low, and this high. And according to this fib, that's what we're facing. The 382 is a little lower than the simple fibs 382, and we have a target here to the upside, you know, that's above the 382. Maybe if we do like the other way around, we're gonna be talking about what, the 786, right? So we're gonna be talking about the 786 or 883, you know, so which is in between the 89 and $93,000 range. Okay, is it possible? Yes. And what is the other fib that we can think of? This is the fib, which is the fib from this low, this high, and this low right here. So that being said, have a look. This one applies pretty well for lots of reasons. First, we had the golden pocket as strong resistance. We're facing this strong resistance here at the golden pocket. We have the 0.5 as very strong support as well, you know, and we have the 382 final here. Again, this is a good one to mark. I'll mark this one in here as well with the dotted lines. And what about the projections? If we project here the 1618 instead, what will we have? Just so you see, not as high, only if we consider the 2618. But the 1618 is like this. The 2618, where would that be? Yeah, way above. So we have this $91,000 target is a little like too much maybe, you know, but we have supports to consider here, right? And I think that's enough. Not to lose that as much time as we could, let's come here to the Dow Jones in 1929, okay, and nowadays, okay. And you see that we have like a formation that is quite similar. And if we take like a fib from the bottom to the top, the bottom, last bottom to the top, we had like a 500% increment, and here it was a 500% as well, like 30%, 531, 506. Here we had like a downturn that was like a 89% downturn. If we are, and it's from the fib projection, we take the lower fib, same way we did in here, the lower fib, and here we got to the golden pocket zone. So we swept the lows, the previous lows, you know. So we need to consider that that's possible to happen. The previous low was here 2009, you know, but the COVID low was here at the 382, and you had like a 382 support here at the first strong drop from the Dow, you know. So this could be a bouncing area, you know, the 382, the COVID low. And if we keep going further down, if we consider the same kind of pattern, we could be seeing Dow Jones around the 5,000, 4,000 point region. Is this too much for you to think of? Yeah, for me too, but I haven't been there at the 1929 depression. I didn't see what happened. I haven't seen, you know, so I don't really know, you know. But we have these levels here, the 20,000 level, the 12, 13,000 level, you know. But I do think at least the previous lows that, you know, I mean, it's unarguable as well that the Dow Jones is facing an actual bull run for years. I mean, this was kind of like the start of like a bull run that happened for over, I don't know, 5,500 days. It's more than like 10 years of a bull run, you know. You see that we had like this was a strong, very strong and deep, steep correction, you know. And we might have had corrections that are as this one, but we could consider like a very long bull run for the Dow, you know. So this is something to take into consideration for one specific reason. We have here the 10-year to the 2-year yield, and we have like a level that if we consider these dates in the 90s, the 21, 27, no, the 2001, 2007, and 2019, those were periods where we saw recessionary periods, longer ones and shorter ones, you know, longer ones, longer and shorter ones, steeper ones. You know, this was COVID. You know, this is the COVID bottom. These are like bottoms for the stocks. You know, all of these highs are bottoms for stocks, and all of these lows are highs for stocks. And we're pretty much coming back into really strongly the level of the unsteepening, the actual reversal of the steepening process. And that's exactly when we have the recessions to kick off. So I do think it's something to consider. I do think if we take these supports and resistance zones into consideration, whenever we flip above this gray area in here, we should watch carefully and see whether or not we're taking the right decisions on our capital and investments. This could turn into a very good opportunity for those who see it and just don't see their money vanishing in the stocks and other assets, and take like a measurements of protecting themselves either with gold or dollars, if that's the case, to be able to buy back in when the curve flips back down again. So I think it's something you should consider, and I hope this was good information for you, you know. And although we talk about Bitcoin mainly, I think it's always important to keep the audience informed about what might happen to the whole market. That will include Bitcoin. Bitcoin is a risky asset. You know, it's not a hedge against inflation or against or to protect you against any governmental I don't know, stealing of your money. Not yet. If this happens one day, it will be in a day that everybody will know about it. And our market cap is super tiny. We have like a market cap of what, $2 trillion. We've had like a what was the top? It was a $3 trillion max. Now we have Bitcoin close to its all-time highs with a market cap that is way below its previous levels. You know, it's 32% below its previous levels. So, you know, beware of it and take care of your money. And I hope this was useful. Send this out to people that you think might be interested in content. Like and subscribe and comment, and go to our Telegram channel where you can have premium access to the signal room of shorts and longs. The short of your lifetime might be coming to the long of your lifetime right after the recessionary period. So that's it. I hope you like it, and I'll see you again in the next video. Bye.